Hello, in this session, we will answer one of the most common questions. Can you invest your 401k in private companies? The short answer is yes, but only if your plan is structured the right way, and only if you follow some very specific IRS regulations. As always, please like today's video, subscribe to our channel so you receive notifications when we go live. Go ahead and shoot over any questions you have as well during today's daily webinar. And we'll go ahead and answer those questions as they come in. They can be regarding any aspect of solo 401k plans, self-directed IRAs, rollover startup financing 401k, as well as traditional 401ks. We'll pause and answer those questions as they come in. So let's get started. So again, today's topic is, can you invest in private companies with a 401k? So the answer is yes. And there are various types of permitted investments when we're talking about private companies. So they can be shares of privately held corporations, membership interests in LLCs, limited partnerships, startups of early stage companies, private equity funds, or venture capital. So these are all forms of private company share investments. So we're talking about equity investments where your solo 401k invests in a private company and therefore it takes an equity interest. So when we talk about privately held corporations, we're talking about C corporations, not S corporations, because the S corporation regulations do not allow for a retirement account, whether it's a traditional 401k, a self-directed solo 401k, or even a self-directed IRA. The S corporation regulations do not allow for those types of retirement accounts to invest as an equity investment in an S corporation. But it is allowed if it's a C corporation. And of course, if it's an LLC, instead of shares of stock, it would buy the solo 401k would invest in units, membership units in the LLC. And then you've got limited partnerships. That's another common one where you've got the general partner that manages the limited partnership. We see that quite a bit in the context of real estate, especially like real estate syndicates. As far as startups and early stage companies, that's typically a C corporation, and it can be it's oftentimes a private stock. For example, if it's SpaceX, that's a private corporation, meaning they're not traded on a public exchange like the NASDAQ or the Dow Jones. Another one that comes to mind, or I can't think of the name of it. It's not SpaceX, but Gemini. For example, Gemini is a private company now. I know that they're looking to go public here soon, but if you've invested in Gemini as a private company, meaning they're not publicly traded, then you could do so with the solo 401k, and then when it goes public, the solo 401k would reap those benefits if the stock shoots up. And those are just some of the private startup early stage companies I mentioned there, but they can take any form. They can even be a company that maybe your neighbor is starting, or maybe someone in your circle. They're starting their own private equity fund, for instance, and they're looking for capital for investors. So a solo 401k could certainly invest in that neighbor's or someone in your circle, a friend in your circle's private equity fund, for example. Okay, again, go ahead and type over any questions you have during the live webinar, and we'll pause and answer those questions as they come in. Please also subscribe to our channel so that you receive notifications when we go live. Again, we typically go live once a day, oftentimes twice a day. Looks like we'll be going live again here today in a few hours. So let's talk about IRS rules and restrictions with respect to investing in self-directed solo 401k in private companies. So anytime you make any type of investment, whether it's through a self-directed solo 401k or a self-directed IRA, you have to be aware of the IRS regulations, specifically the prohibited transaction regulations. Those are very important. So the prohibited transaction entails not investing your self-directed solo 401k in a company that's under your control or it's in control by other disqualified persons, like your parents, children, or spouse. Those are examples of disqualified parties, persons. So that would be a prohibited transaction. So, for example, let's say your son has started a um, private limited partnership for investing in real estate, and he's looking for investors, and you tell him how you have a self-directed solo 401k and you would like to invest in his real estate syndicate. Unfortunately, you would not be able to if your son is the general partner of that limited partnership syndicate, or if he's even an employee of that limited partner limited partnership syndicate, because your son is considered a disqualified party. So as a result, you're not allowed to invest your self-directed IRA or your self-directed solo 401k in a private company whereby your son is either an employee, officer, or director of that company, or a general partner in this example. Self-dealing, likewise, self-dealing in the context of a private company, that means that you cannot invest in your self-directed solo 401k in your own private company where you are the manager, owner, officer, or an employee. That's prohibited. Now, don't confuse those regulations with the rollover business startup 401k. That's called a ROBS 401k. That's a different transaction where you also invest in your own company, but that's only allowed under the rollover business startup 401k. And that requires a C corporation, and your 401k becomes a shareholder in your C corporation, and you are required to be a W-2 employee of that corporation. So those are different rules. We're talking here about investing a self-directed solo 401k in private company shares. We're not talking about the rollover business startup 401k. So don't confuse those two there. So regarding no self-dealing in the context of investing your self-directed solo 401k in a private company, again, that private company that you would invest your self-directed solo 401k into, it cannot be a company that you operate or are an employee of. Doesn't matter what percentage. So anytime you make an investment with a self-directed solo 401k in a private company, it's good to understand that it needs to be at arm's length, meaning that it cannot be a transaction where it's for personal use, where you're investing those funds in your own company for personal use, where you're going to be running that company, you're going to be receiving some type of compensation. That would be an indirect receipt of those solo 401k funds. So that's why oftentimes you hear the terminology arm's length. Other things to understand when investing self-directed solo 401k in a private company are valuation regulations. Specifically, those that want to process a conversion. We have many clients that invest in private companies, and then later on, they find out about the Roth Solo 401k. So they decide that they want to convert that's pre-tax solo 401k on private company investment to the Roth solo 401k, which is allowed. That's referred to as an in-plan conversion. However, you have to get a valuation because that conversion has to be done at fair market value. Because when you convert pre-tax solo 401k funds or an asset owned by the pre-tax solo 401k, that's a taxable event. So that's going to be a taxable conversion, which means you're going to have to pay taxes at the earned income tax rates based on the fair market value of that investment, a private company, which would be considered an in-kind conversion. When you convert an asset instead of cash from the pre-tax solo 401k to the Roth solo 401k, that's known as an in-kind, in-plan conversion of an asset. So that asset, in this case, that private company shares, would get converted to the Roth solo 401k, and then you would have to pay taxes, not the solo 401k, but you would have to pay taxes on the amount due on that conversion, which would be taxed at the earned income tax rates, which may bump you into a higher tax bracket. And you have to pay those taxes with personal funds, not solo 401k funds. Also, with the distribution, let's say you want to distribute those shares out of the solo 401k because you're terminating the plan and you do not want to transfer them to a self-directed IRA, which you can. It can be an in-kind direct rollover, but instead you want to distribute those shares and take personal possession of those private company shares. That would be considered an in-kind distribution subject to taxes and penalties, and valuation would be required at that point as well, so that the government, the Internal Revenue Service, the Department of the Treasury collects the tax revenue due on that distribution. Because anytime you distribute an asset owned by the pre-tax solo 401k or cash, that's a taxable event. It's subject to federal taxes. It may not be subject to state taxes, which depends on your state of residence. And it may not be subject to the 10% penalty if you are over age 59 and a half. But generally, you have to pay that 10% penalty for distributions that you make under age 59 and a half. Now, keep in mind that the 10% early distribution penalty does not apply to Roth conversions. That applies to distributions. Okay, looks like we've got a question here. Let's take a look at that. Again, go ahead and type over your questions during the live webinar, and we'll answer those as they come in. And then we'll continue on today's topic, which is, can you invest in private companies with a 401k? We have been learning that the answer is yes, but certain rules apply. Okay, we've got a question here. If starting a Rob's 401k once it's started, and I want to continue to make contributions to the 401k plan, are there regular funds that are part of the plan, like the S&P 500? And second, can funds be used to purchase another private company? So yeah, keep in mind that the rollover business startup 401k, where you invest your 401k in your own C corporation that you're going to be working under as a W-2 employee, working at least 1,000 hours, that the 401k is going to become a shareholder in that corporation, so it owns private stock in your C corporation. Then, as you make annual contributions to the Rob's 401k, or if you transfer a large amount from an IRA or a former employer plan to the Rob's 401k, any funds that you don't use to invest in that corporation, those can be used to invest in stocks. The Rob's 401k is an open architecture 401k, meaning that not only can you invest in your own business, but you can also invest in any publicly traded stock, any index funds, any CD bonds. So it's open architecture when it comes to equities. And that would be done through the brokerage account for the Rob's 401k. And most of our clients use Schwab or Fidelity to hold the funds for that Rob's 401k. So again, any funds that are not used towards the purchase of your corporation through that Rob's 401k, the remaining funds would stay in that Rob's 401k and they would be invested in equities that you would like, whether it's index funds or any stock out there. It's a good question. As far as using the funds to purchase another private company, no, the Rob's 401k cannot be used to purchase a private company as an investment. It can only be used to finance your own business or invest in equities. However, if you want to open up another location, for example, many of our Rob's 401k clients will fund a franchise with their Rob's 401k and then they want to open a second location later. That's allowed. You can do that through that same Rob's 401k plan. Okay, great question. All right, let's continue here with today's topic, which is can you invest in private companies with the 401k? And go ahead and continue to shoot over your questions as we continue with today's topic. It doesn't have to be questions surrounding today's topic specifically. It can be all aspects of 401k plans and IRAs. So we just discussed IRS rules and restrictions. And let's talk about uh, administrative considerations when investing your self-directed solo 401k in private companies. So obviously, in order to invest a 401k in private company shares, you have to make sure that the solo 401k that you open allows for it. Typically, it needs to be a self-directed solo 401k plan that allows for alternative investments. Alternative investments besides private company shares include cryptocurrency, real estate syndicates, physical real estate, whether commercial, residential, or farmland, for instance, precious metals, gold and silver, for example, promissory notes, oftentimes called trust deeds secured by real estate, even tax liens. So there are a large amount of alternative investments allowed in a self-directed solo 401k. So make sure that before you open that solo 401k, and if you're planning to invest in alternative investments, including private company shares, that you open the solo 401k with the self-directed solo 401k provider that allows for solo 401k investments, such as alternative investments. A company such as my solo 401k financial does allow for alternative investments, including private company shares. Also, another consideration is keeping records for the purchase of that private company. As the trustee of the solo 401k plan, you're going to safekeep the investment documents in connection with that private company investment. So it could be the subscription agreement, private stock certificates if they're issued. Those are typical documents that are used to document a private company investment. If we're talking about an LLC, it would be an LLC operating agreement. If we're talking about C corporation stock, it would be shares of private stock. So again, that investment needs to be documented. And also the title to that investment will be taken in the name of the self-directed solo 401k for the benefit of the trustee, which is you. So let's say the name of your self-directed solo 401k is Jefferson Retirement Trust. And let's say your name is Andrew Jefferson. So title to that private corporation investment or private company investment would be titled as Andrew Jefferson, comma, trustee of Jefferson Retirement Trust. That's how title on those private share or company investment documents would be listed. Also, the private company is going to ask for the EIN number, the employer identification number. You want to make sure you use the employer identification number for the solo 401k. not the EIN for your self-employed business, because it's your solo 401k making that private investment, private company investment. So when that private company goes to issue a Schedule K1 at the end of the year for their reporting, you need to make sure that they issue that K1 using the EIN number for the solo 401k, and that it's issued in the name of the self-directed solo 401k. So for reporting purposes, it's important that that procedure there is followed with regards to the title as well as for reporting on that Schedule K1. And then when you go to make that investment in that private company investment in that private company where you're buying equity, private shares, you need to make sure that you wire the funds from the self-directed solo 401k bank or brokerage account directly to the investment sponsor. The funds can now flow to your personal bank account or business bank account first, and then from there to the investment sponsor. That would be considered a taxable distribution if those funds do not flow directly to that private company sponsor. So that's very important. Other administrative considerations is that when it's time to determine whether or not a Form 5500 easy needs to be filed for that solo 401k plan, and a Form 5500 easy, it's an informational return that applies to solo 401k plans. It does not apply to SEP IRAs or IRAs. SEP IRAs and IRAs have a Form 5498 that's used to report the total value of those IRAs on an annual basis. For a solo 401k, that form is known as Form 5500 Easy. However, with the solo 401k, that Form 5500 Easy, which gives the IRS a snapshot of the plan activity throughout the year, including the total value of that plan as of the end of the plan year, typically December 31st. That only applies if the market value of your self-directed solo 401k plan is greater than $250,000. Now, in that, as far as calculating that $250,000 threshold for Form 5500 Easy requirement reporting, you have to add up all of the assets of the solo 401k, so the alternative investments, whether it's private company shares, real estate, cryptocurrency, liquid cash, stocks, those are all holdings of the solo 401k. So you have to determine the total value of that plan by adding up all those investments, including the value of that private equity investment, private company share investment. So that's taken, so the value of that private company is taken into account in calculating the total value of the solo 401k plan as of year end to determine if a Form 5500 easy is going to have to be filed. So it's not just the liquid cash, it's all the assets, including the private company shares, that have to be added together to determine the $250,000 filing threshold for Form 5500 easy reporting. So those are things to keep in mind. All right, again, go ahead and like today's webinar to help get the word out to other solopreneurs like yourself. Please also subscribe to our channel so you receive notifications when we go live. Go ahead and also type over your questions you have regarding any topic. Doesn't have to be surrounding today's topic. We're coming close to the end of our session, so make sure you shoot over those questions and we'll pause and answer those questions as they come in. So today's topic again is, can you invest in private companies with the 401k? Let's take a look at this next slide here. So let's talk about the bottom line. Invest. So yes, you can invest your solo 401k in private companies. You just want to make sure that you open the solo 401k plan with a company like my solo 401k Financial, who offers a self-directed solo 401k that does allow for investing in alternative investments, including private company shares. We also talked about avoiding prohibited transactions. That's very important because if your solo 401k plan engages in a prohibited transaction, it could subject the entire solo 401k plan to taxes and penalties in the year that the prohibited transaction occurred. So be mindful of those prohibited transaction rules when you make any type of investment, whether it's private company shares or real estate or other types of investments. Make sure you understand those valuation regulations. Again, if you process a distribution or a conversion where you convert pre-tax solo 401k funds or assets owned by the solo 401k, including private company shares, to the Roth solo 401k, or if you take an in-kind distribution, that's going to subject your plan to taxes and possibly penalties. So a valuation has to be performed to determine the fair market value to to pay taxes on. And again, you need to make sure you use a compliant self-directed solo 401k structure when making any type of investment. So that's the bottom line. All right, I don't see any other questions for now. I don't see any comments, so I think we're going to stop there. Again, we'll be going live again later today. And again, as always, thank you for joining today's daily webinar. And we'll be back live again in a couple hours, and again tomorrow at the same time as this morning. Until next time, have a great day.